Hello, it's Red with RedDragonLeo.com. It is Monday, June the 9th, 2014. It's been a while since I did a new post. I just haven't been motivated, I guess, to do it. This light volume melt up that we just had just is very depressing for us bears, as you know. Don't get me wrong, I will go long from time to time, but most of the time I just like to go short. But anyway, I want to discuss this area that we've got right here and try to analyze what happened. And I actually put that on a chart here. I actually drew this, and I'm going to make this large here for you and bring it over here to look at it. And there we go. Basically, let's see, we start down here in this area right here. This trend line, this upper trend line, was not there in the beginning. It wasn't there until actually we broke through it. It wasn't in this spot, I should say. It was actually, if you connect this 1812 down here to this 1907, you could draw a line there, and then you could keep on drawing back here and say that it busted through it there and then came back. But even if you drew a line here, and I don't think you'd connect that one, but you would certainly connect this one here, and then if you kept on going through here, you would connect in this zone. But this here was actually a pierce through. It was actually a pierce through. So it basically, the market went and pierced through that trend line and then dropped back 30 to 40 points. Then we chopped sideways for a bunch of days, and then we dropped again 30 to 40 points. Then we ran back up, chopped sideways again. Then we had a nice little ABC down for a 6% correction, approximately 6%. Then we ran up again, and we put in a new high. We busted through this area here. There's no horizontal trend line, but just imagine if there was a line right here to right here to right here. We busted through it, put in a little higher high. And when we put in this little higher high, it made it look like we were going to this new adjusted trend line that you would have had connecting the 1709 here to 1813. You would have probably ignored that tail. You would have probably drew the trend line in that area, and that's probably where it hit, in that area. So basically, we busted through. Kind of lost track where I answered that phone, sorry. So basically, we busted through the horizontal line, went up here, and we did not hit the upper rising trend line here, and we fell short. And if there were a line drawn through here, I believe that that area right there would have made a lower line. It's just not on here. So but regardless, what had happened was it busted through the horizontal resistance, went up here, fell short of the upper trend line, and then sold off another 30 to 40 points. And we've seen this happen, you know, lots of times. That's what they'll do. They'll have these 1, 2, 3 day wonders where they drop 30, 40 points, and then they resume back the uptrend. So that's basically what happened. And at this point, when this high was made, we could draw and create the middle trend line that's here. So we dropped down, we rallied back, put in a lower high, as you can see. Then we dropped again, another 30, 40 points. And we finally rallied again, and we hit the rising trend line. This would be the third hit of it, after this one being the second, and obviously that one being the first. So at this point, we would certainly expect another pullback, and sure enough, we did. It was more than 30 to 40 points. It was, as you can see, like 80-some points, and it turned out to be like about a 4.5% correction. So down here we had a 6% correction, and here we had a 4.5% correction. And obviously, we went back up again, and this time we hit the resistance line here, which this was starting to look like that being ahead, and this being your left shoulder, another left shoulder. Here was a small right shoulder, and then here's another right shoulder. So you kind of expect it to roll down. It did, but it did not go down here and hit this trend line again. It fooled a lot of people, including myself on that. It did not go down. So you just had the 30 to 40 points down days, the couple days down. Then you went back up again, chopped around. You finally pierced through it and went back up here and hit a double top here. Then you sold off another 30 to 40 points. And then we ran up here and busted through that line and went up here and hit this rising trend line again. Now at this point, if it would have followed the same pattern that's done before, you would have expected another 30 to 40 points down to probably hit this lower rising trend line. And for some reason it didn't happen, which was very strange to me, because you can see that's what it did here. It has a habit of chopping sideways, busting through resistance, hitting a little higher high, then dropping. And that's kind of what it did here. If you drew a horizontal trend line right here at that little peak right there, if you're looking at my mouse, over to this peak here, that horizontal trend line, you can see where it busted through right here. It busted through, went up here, hit that, and then you would have expected it to fall back down. The only conclusion I can come to was the volume was so light that they were actually able to push through it this time, push through this rising trend line and go higher again, which leads me to believe that they're going to follow the same pattern that they did here, which is fall short of the upper rising trend line and not hit it. I'm suspecting a high today. Today is Monday. I'm doing this today or Tuesday in the 1950 to 1970 area. I'm not expecting it to get up to this high here, and I think it's going to fall short just like it did here. And then we should roll over and have another 30 to 40 point down day. Now where it's going to go, I would suspect right back down here to this same area, and that's where you're going to find support. If it does break that, then yeah, we'll go to this lower area here. But considering that this week is the week before options expiration, they tend to put in the low on the Thursday or Friday, the week before options expiration. I'm talking about the monthly options expiration. And that monthly options expiration is next Friday, the 20th. So this Thursday or Friday, the 12th or 13th is typically when they're going to put in a low. So with that being said, I'm not looking for it to drop more than to basically back to this zone again. And it may pierce through and hit that blue moving average there at 1923, just to fool the people. But I would expect that to be your spot to go long into the week of options expiration. It's usually bullish, with an attempt to go up here again and try to hit this line. And you extend this out, at some point it's going to hit 2,000, and I definitely think we're going to go above 2,000. But if this line breaks, if it breaks, I don't think it will, unless it's just intraday peak. But if it breaks, then certainly we're going to go down here and find support in this area here, which will probably rise up and be, it's about 1880 right now. It might end up being, and there's a lot of support in that area, as you can see right there. So it's not much chance of it breaking through and falling down through there. That would be a pretty big setback for the bulls to drop that far. But and that obviously would be another correction. It would be another ABC. It'd probably go like this, just like that, ABC, where the first A leg down hits this area, back up for a B, then back down and hit the bottom there for a C. And that could happen, but that would violate next week being bullish, because that would have to carry into next week, most likely, and that just usually doesn't jive. But it is possible that next week could be a bearish week. Maybe it starts off bullish and turns and goes bearish. About 80% of the time it's bullish. So based upon the daily chart, if you rolled over, and this is kind of a similar pattern here where you started to go down, then you had a little rally, then you went down again. So that's your kind of your ABC move. And it is possible that could happen. So maybe we hit a bottom here this Thursday, Friday in this area, 1925 area. Then you rally into next week, into late next week, and then you roll over the week afterwards, possibly. You start your move down maybe sometime next week, maybe a Friday or something, a surprise, or a Thursday, and you start that move down, which would be this second leg, this C leg right here. and then it might bottom the week afterwards. That would be the week of let's see. That would be the week of the 27th. So if you were to, again, come down here to this support, and with the peak being today, Monday or Tuesday, and come to this support, that would be like your A leg down, like right here. And that should end on the 12th or 13th. Okay, sorry about that. Now, let's see, where was I after that call? I'm always losing track after that. So, anyway, what the pattern seems to be is that it'll hit the horizontal support line for a little while, then it'll bust up above it. It did it here, and then it fell short of this upper rising trend line. Here, the same thing. It went up here, and I think it's going to fall short and then fall down, as I said. And then, as far as the date wise, again, if we are to bottom here on the 12th or 13th, and then we start to rally back up through this week of options expiration, that again would be the B wave up, and then you could have it. And that's not saying that's going to. It may just be a 1 or 2 day wonder. But then the week afterwards, you could have a move down to this area here, rising trend line on the lower support trend line, and that'd be an ABC correction, and that might be another 4.5% one, or even a 4% move down, and find support in this area here. That's a huge support area, so I really doubt that that's going to break. So, and again, that would happen in this week. And then after that, of course, you would rally into the 4th of July. And, then if you go forward on all this, then I'm suspecting that, that week to be a big rally week, and then probably the week after. And my best guess for a top date is this date right here, the 16th. So somewhere around that way, about the middle of the month. We'll get to that when we get a chance. So, as far as this week, I am looking for a pullback still, and it should be another 30 to 40 points, possibly a correction of all the way down to this rising trend line on the lower one, but I wouldn't count on it. I would just be happy with a 30 to 40 point down move. It should be a nice little move down. That is it, gang. Thanks a lot, and good luck, and be sure to come to the blog for updates. As once I do these videos, of course, things do change, and I do routinely post updates on the blog in the comment section of the blog for as long as the post is active. Thanks a lot, and good luck, everyone.